Hello students, today we shall be understanding the problem of internal reconstruction, how the companies frame the scheme. Now the analysis or understanding of the scheme of reconstruction is important, not because we are to frame the scheme, but because we are to account for internal reconstruction, and we can make entries only when we understand the scheme properly. So take the case of a company, Ajanta Limited. It is having equity and liabilities. Shareholders funds includes two type of capital, equity share capital and 10% preference share capital. Then you have reserve and surplus, which shows a negative balance. So it's a loss for the company. They have non-current liabilities, 8% debentures. They have current liabilities. Again, there is a provision. Then you have assets. Tangible assets include building and machinery. Intangible assets include goodwill. Then you have current assets like inventories, trade receivables, cash and cash equivalent, and other preliminary expenses. So when you look at the balance sheet, what we find is that it is having a lot of accumulated expenses or losses. Like out of 2,34,000 rupees of total here, 1,60,000 is the loss. Then you have goodwill, preliminary expenses. So in all, the company is having a lot of losses. Further, it is having provision for tax, which implies the liability is yet to be settled. Then we are not sure about other assets also. So when a company is having huge burden of loss, it wants to reorganize its structure. That is, it wants to show its liabilities at their proper claims. They want to cancel out all the losses against either capital or through some other means. Further, they want to bring the assets at their true value. Let us add a few more dimensions to this. Suppose interest on debentures is also outstanding for the year. Your debentures are 8% debentures of 50,000 rupees. So you have 4,000 rupees of interest outstanding. Preference dividend is in arrears for the last 3 years. So this is also a sort of liability. Machinery is overvalued by 20,000. So 20,000 must be reduced from machinery. Then you have value of building 60,000. Look at building here, it is 50,000. So here is a silver lining that you have some gain also. So 10,000 is increase in the value of building. So this is the only profit which is evident here. Then you are to create provision for bad and doubtful debts at 10%. Inventories are worth 30,000 only. Liability is settled for tax for 15,000. It is to be paid immediately, whereas we have provided for 4,000. So this kind of balance sheet is infested with a lot of losses, either because they are exactly there in the form of intangibles, accumulated expenses, or a negative surplus, or because most of the assets are having lesser value as compared to what the books are showing, and your liabilities are underestimated. You have more liabilities, interest is there, tax liability being settled is to be recorded. So now the company wants to go for complete overhauling. So how can this be done? When you have so many of losses, who is going to bear the burden? Usually the burden is borne by the owners, and here in case of companies, equity shareholders have to bear all the burden. But if you go for that, the company might not be having sufficient assets to pay even its liabilities. So in that case, everybody is going to suffer. So what company does is that they think of a plan to improve their financial standing, and thereby they want to improve on the working of the company so that the company is in a position to pay its liabilities after some time. So the complete financial reorganization is needed. Now, how do company do this? First of all, they make an estimate of the total losses. Like some losses are very much clear here. So for our better understanding, I am just writing losses here only. you have a loss of 1,60,000 arising in surplus. Debentures have 50,000 rupees of claim, liability is there for interest. Now if they forego interest, then the liability claim is same. But if they want their interest to be paid, then the interest will also be a part of the liability. Then you have trade payable, no changes intended here, but provision for tax is 4,000, but the liability settled is 15,000. So if we want to account for this, we have a loss here 11,000. Your goodwill is total loss because there is no value given to us. Now regarding building, of course you have a gain because its value is plus 10, that is 60,000. Your machinery is overvalued by 20,000, which means if you want to reduce the value, so you have a loss of 20,000 here. Then they say that inventories are worth 30,000 only. So inventories, if they are worth 30,000, there is loss of 24,000 here also. On trade receivables, we are to create a provision for 2,000 for bare and doubtful debts. So this is also a loss. Cash is there absolutely. Then preliminary expenses is again a total loss. So you have so many losses. If you want to improve on the financial position, you want to cancel the losses, then make an estimate how much amount is lost in all. So these are all losses. If you add up all the amounts, the only thing which is not a loss is 10,000 gain. So this gain will be cancelling some of the loss. So what do we get here? So just add up all the losses. So 2,62,000 is the amount of total loss. So this company has a total loss of 2,62,000. If they want to show everything at their true value, this is the amount that they are going to settle. So who is going to bear the loss? So companies goes for the settlement and compromises. So they just want to compromise on their claims. So this picture is presented before the liability holders and they are convinced to sacrifice some amount, to at least forego a part of their claims in favor of company, so that company can stand on its feet and it can improve on its working. So they take the case to debenture holders. So they may agree, yes, okay. So they agree that let us sacrifice some amount. So maybe they agree that they sacrifice interest. They want to forego interest. Now they may forego interest, but for company books it is immaterial, because in books we do not have that as a liability. So if they forego interest, good for the company, but for books there is no gain, no loss involved here. So the company may try to convince them to at least sacrifice some part of their amount. Maybe they are willing to sacrifice say 10% of their amount, provided their rate of interest is increased. So here is a compromise being taking place here, that they will sacrifice 10% of their claim provided they are given 10% rate of interest. So maybe, so in case they are willing to sacrifice, this 8% will be changed to 10% and we get a gain of 5,000 here, a fresh gain. So the next liability will be 45,000 here. Likewise, the company may try to convince the liability holders, like you can sacrifice some amount in the favor of company so that company can improve on its performance and then it will be able to pay the amounts. So the trade payables, they may agree on some amount, they may not agree. In order to convince them, sometimes companies offer them certain benefits, like if you sacrifice some amount, say 30%, we will pay you immediate cash. So cash is payable immediately if they give some discount. So they may agree to give the discount. Sometimes companies offer them share capital or ownership in the company, that if you sacrifice some amount, you will be given capital for the remaining balance. So suppose, let us just assume that they are willing to sacrifice 30% provided they are given capital. So you collect a benefit of 12,000 from them also, that is 30%. So they give you benefit of 30%, that is 12,000. So how much is left now? You had a total loss of 2,62,000. You are still able to get benefit of 17,000, in the sense the amounts foregone. Alright. So this is the sacrifice made by the liability holders. You are still having a deficiency of 2,45,000. Now this loss will be borne by the owners, that is equity and preference shareholders. Now preference shareholders are very difficult to convince because they do not have any right over reserve. So they say that we will not bear the burden. So what happens is, again the situation is explained, that if you sacrifice something right now, then in future it is a possibility that you will get your money back. If right now this company goes into liquidation, you may not be getting anything. So they may be willing to sacrifice some amount. So suppose they are willing to sacrifice, let us say they are willing to sacrifice half of their capital, that is 50%. Again, there is a compromise here, that they may want increase in their rate of dividend. So maybe it is increased to 15%, and then they sacrifice 50,000 from their balance. So now their capital is reduced to 50,000, but rate of interest will now change from 10 to 15%. So we got a benefit of 50,000. Okay, so the rest of the burden will be borne by the equity shareholders, which means that equity shareholders will have to bear the loss of 1,95,000. That means their capital left will be 5,000 only. So you see, the bulk of loss is being borne by them, as is the usual case. So 97.5% we can say they are sacrificing a huge amount. So after 2 lakh, their capital left is only 5,000. So what happens is that in case of internal reconstruction, a scheme of compromises and arrangements is decided. So this is what goes in the background. We are not to see how this scheme is being framed or who is going to sacrifice what amount. But we must know that yes, in case of internal reconstruction, shareholders forego their claims. Preference shareholders forego their claim of dividend. Sometimes they forego a part of their capital also. Liability holders are also convinced to sacrifice some amount or forego some amount with the benefit of getting increased rate of interest, or maybe conversion of their liabilities into share capital. So we get benefits from these people in form of sacrifices in such a manner that the overall sacrifice made by these parties, by these liability holders, is just sufficient to write off all the losses. So once this scheme is approved and it is accounted for, we will be having a balance sheet which is showing assets at their true value and liabilities at their rightful claims. So the balance sheet is of course reduced. When this scheme is approved with the permission of the court, then it is also required to write the balance sheet of so and so company and reduced. So this is after reduction. So anybody who is looking at the balance sheet also knows that this company has gone through the procedure of internal reconstruction. So what we have understood here, that in case of internal reconstruction, companies' assets are overvalued, liabilities are underestimated or underplaced. So in order to write off all such losses, company requires their liability holders to sacrifice some claim. Now that claim can either be sacrificed or it can be foregone. If they are sacrificing anything written in the books, it is a profit for the company. But if they sacrifice anything which is not here in the books, then it is not a profit or loss for the company. Like here for preference shareholders, there is nothing written here for their dividend. So if they forego the whole claim on dividend, of course it is a gainful situation, but from books point of view, it is not a gain, because books do not show that as a liability. So we will not account for the same, although it is a gain. Similarly, the company may be having a court case pending. So there is a case pending in the court of law for the damages. Say the amount is 10,000, which is settled. Now, this is not a liability recorded in the books. So if this liability holder agrees to forego, say 60% of the amount, it means that he is sacrificing 6,000 and in return he wants 4,000 to be paid immediately. So practically speaking, you have a gain of 6,000 and you are to pay 4,000. But from accounting point of view, this gain will not come into books because this is not there in the books. So only 4,000 will be recorded, and for books it is a loss. So ultimately we are to adjust all the amounts in such a manner that finally assets come down to their true value, liabilities are also adjusted, and we have a balance sheet showing true and fair view of company's position. So the question will be given like this, that we are having a balance sheet, then all the planning for compromise and arrangement that we have understood, that we will be provided for in the form of adjustments. Like we might be given share capital is reduced by 90%, preference shareholders are agreeing to reduce their claim by this much, liability holders are agreeing to do this much sacrifice, and we are to measure the assets at so and so value. So we will account for all these transactions. So I hope the concept of internal reconstruction is clear to you, like what type of transactions will be there and what is to be accounted for. Thank you.